How's it going, everyone? It is Andre Williams, and over here we talk stocks and we focus on one thing. Always protect your profits. And today we're going to be talking about CEI Camber Energy. If you remember what I said in my previous video, there is no reason why you should be buying this stock when it's trading in the 80-cent range. There's a good chance it will pull back into the 70-cent range. It did exactly that on the Thursday, getting down to 76 cents and seeing a high of 91 cents. I got some messages about it saying, yo, Dre, did you see Camber? I've been telling you guys this is a commodity type of play. If you want to see spikes in oil prices and make money off of it, keep an eye on Camber. And we've been talking about this strategy for so long, so I know many of you have been making bank, and I want to get you prepared for this coming week. I won't waste any more time. Let's jump into the agenda. If you're new to this channel, I just want to let you know we have timestamps down below inside the description. But if you're a shareholder, you're thinking about taking a position, I highly suggest you watch this full entire video. So the first thing we're going to go over is the technical analysis. We're going to be taking a look at the overall price action. We want to know support. We want to know resistance. We want to know what it looks like in the bearish case scenario and as well as in the bullish case scenario. And then we're going to be going on Fintel, taking a look at the recent institutional ownership and short interest information. The reason why this is important because it does have an impact on the way the stock performs. And then we're going to be taking a look at the order flow distribution. We want to know the buying and the selling behavior on the retail side and as well as on the institutional side. And then when all of that is done, we'll be going into the final thoughts and as well as some more details. So let's get to it. So we're going to do a technical analysis for CEI Camber Energy. Let's see how it performed on Thursday. So it ended up closing at 87 cents, being up 5.58%. On the low, it tested 76 cents, and then on the high, testing 91 cents. So when we take a look at the volume stats on the day, you can see we traded at 64.654 million shares, and the average volume over 10 trading days is at 27.305 million shares. So you had well above the average in regards to volume, and we've seen some strength in the stock. Now, when we take a look at our chart, which is a daily chart, you can see from the RSI down below, it is at 54.08. And then when we take a look at our moving averages here on the chart, we are below the 200-day, but we are above the 50-day, the 21-day EMA, and as well as the 100-day. So if you guys remember what I said in my previous videos, if we get a pullback going into the mid-70s, this is an area where you could consider a position. And what did we get? We get that pullback going to 76, and we end up seeing a high of 91. So what does this show you? Doing your homework does pay off. So as far as this high that we saw at 91, we know we want to look forward to seeing some price action above the 200-day moving average, which is right around 96 cents. And if we can get above 96 cents, that's where I look forward to seeing a strong pop to $1. But one thing that is clear though, we do deal with a good amount of selling pressure when Camber gets above $1. So that is one thing to be aware of and why this play does thrive on volume. If we can have some more buying pressure coming into the play, we do have a gap that needs to be filled to the upside right here around $1.05. So I'll be looking forward to seeing that move. And if we can actually hold this area, then the next level that you want to see a break above will be right here around 127. So that's why Camber is a play you want to keep an eye on, especially keeping an eye on oil prices. If we decide to have a pullback now, we have been looking bullish since we have formed higher lows for the past 2 trading days. I want to see if we can hold support at least around 80 cents. So having a pullback to 80 and then seeing if we can move up from there would be a good look, because since the low was at 76, putting another low in at 80 gives us another higher low. But don't be surprised if we end up breaking through 80 and that opportunity opens itself up back again, and we just rinse and repeat this whole entire process. So now let's go on to short interest information. So we're going to take a look at the recent institutional ownership and short interest information for CEI. Scrolling down further on the page, green rows indicate new positions, while red rows indicate closed positions. So when we take a look at the recent filings here, we have a closed position from XR Securities LLC, which is calls. But we also do see the Cutler Group as well, and you can see as far as changes are concerned, as far as for their share position at 14,001, they ended up having a value change of 45%. And then when we take a look at their puts and their calls, we do see an increase here. So this is interesting, and we'll continue to keep an eye on that as well. Now, when we take a look at the short interest, the off-exchange short volume ratio is at 51.82%, and then for the off-exchange short volume, it is just over 22.5%. 1.5 million shares. Scrolling down further on the page, short shares availability is at 2.4 million, updated 10 minutes ago. And then for the short ball fee rate, it is at 39.09, and we also did see a high of the day at 42.15%. And then when we take a look at the history of the short volume, we can see for the close of the 13th, it is at 52.29, and then for the close of the 14th being at 51.82. So what this shows us, yes, there's many shorts who are vested in this play, but knowing that the short interest percentage of the float is at 9.85%, I wouldn't say that CEI has strong short squeeze potential. So now let's move on to the order flow distribution.
Now let's take a look at the order flow distribution for CEI. So we see on the inflow is at 13.52 million, and then on the outflow it's at 12.85 million. So we had an inflow day. Taking a look at the breakdown, on the large it was 1.44 million, on the medium it is 8.71 million, and then on the small it is 3.37 million. Taking a look at the outflow side, you can see on the large it was 1.84 million, then on the medium it was 8.10 million, and then on the small it was 2.91 million. Taking a look at the large scale orders in the last 5 days, you can see for April the 14th we had an outflow of just over 393,000, but we did have an inflow day on the 13th of just over 167,000. Analyzing the numbers even further for the small scale orders that tends to represent the retail side, we had more buying than we had selling. And then when we take a look at what happened on the medium, we had more buying than we had selling. And then when we take a look at the large, which represents whales, institutions, and funds, we had more selling than we had buying. And then when we take a look at the turnover ratio, it was at 17.95%. So what this shows us, Camber is a volatile stock. But for the longest time we've been talking about it on this channel, that shouldn't be surprising whatsoever. And I also did give you guys a trading strategy. Of course, it's not financial advice, but you could see it has consistently been playing out. Buying this stock on the red days and then selling on those green days like we had on the Thursday. So we'll go into the final thoughts and we'll go over some more details as well. So for my final thoughts for CEI Camber Energy, when it comes to the price action, we want to see it get above 96 cents, which is right around the 200-day moving average. Once we can get above 96, I want to look forward to seeing that strong pop to where we could see some resistance around $1.05. But I know there is going to be a lot of profit taking as soon as Camber gets over $1, so that is one thing you want to be aware of. As far as for where we want to see support continuing to hold, I would want to see it hold up at least at around 80 cents. This would give us the opportunity to form another higher low. And we know if we can form another higher low and there's continuing to be more buying coming into the play, that is very bullish. But if it decides to break through 80 cents, of course, we want to see some support hold up right at the mid 70 range or even right at 70 cents. Like I said, there is no reason to be buying at the highs or buying this stock when it has strong green days. It always pulls back. There's a lot of volatility due to the fact that there's a lot of retail interest. There's going to be traders who are going to be taking profits. You're going to have people that are going to be buying for an investment purposes, and then you also have swing traders that want to take advantage of commodity pricing when it comes to oil. So you need to figure out a strategy that is right for you. If you want to buy and hold, just know that there's going to be a lot of volatility ahead, and you want to add more to your position as the stock pulls back. And if you are a trader, making sure that you have the right risk management. You already know where the support is, so just make sure if it decides to break through that support level that you have limited exposure when it comes to losses. This is very crucial. To be a successful trader, you have to manage your losses. Also, when we went on Fintel, taking a look at the recent institutional ownership, we do see that there's interest on the institutional side, but we do see there's a lot of hedging as well. And then taking a look at the short interest information, Camber does not have short squeeze potential. It needs a lot more volume coming into the play for it to make a strong pop. But one thing that we can't forget is what's going on economically in regards to oil prices. So the moment you start seeing a boom or you see a strong spike in the morning, then there's a good chance Camber will be able to benefit from this. But also do know the market doesn't just work in that particular pattern, because there are those days where we have a strong spike in oil and Camber doesn't move or the stock decides to pull back. And why does this happen? Many people ask this question because, again, there's a lot of interest on the retail side, and there's many who are going to be taking profits, right? So you want to make sure that you know the levels, playing off of those technicals, because if you can take advantage when Camber is having a red day, then at least you know it's going to pop, and when it does pop, I'll be able to get some profits. So a good example of what happened on the Thursday, I was saying if you want to take a position, look for getting it in the mid 70-cent range. There's no reason why you should be buying in the 80-cent range. It came down to 76 cents and then spiked all the way up to 91 cents. So that is a good amount of profit right there. Again, we can't predict the top. So if you said, well, you know what, I bought in, let's say around 78, then you had the opportunity where you could have sold around 87 cents or even 88 cents. But again, these are for my traders that are going in and out of these plays. Or even if you were swinging it and you were just buying when it was testing levels of support in the 70-cent range, that is fine. But again, if you are holding this stock, it is a penny stock at the end of the day, so you need to be prepared for that volatility. You need to have the stomach for it. I'm not going to be like other channels that'll say, you know what, buy as many shares as possible. It's going to the moon. Because if the worst case scenario does happen, the last thing that you want is to have a green trade turn red on you. You got to make sure that you protect yourself, especially in the year of 2022. So I hope you enjoyed this video, and I can't wait to see how this stock performs for the coming week. We'll talk soon.